Market Mantra. Market Mantra. Market Mantra. Market Mantra. Market Mantra. Market Mantra.
Welcome to the Sunday edition of Market Mantra, the program in which we give you a complete update on the economic and business news of the day. And today we'll also be taking calls from you on mutual fund and related issues. The numbers to call us on are 23717106 and 23421050. My name is V. Ravi Kumar and with me is my Hindi co-anchor Ambarish Saxena.
नमस्कार। आर्थिक खबरों के कार्यक्रम मार्केट मंत्र के ताजा अंक में आपका स्वागत है। श्रोताओं, आज रविवार है और आज के इस कार्यक्रम में हम म्यूचुअल फंड से जुड़े आपके सवालों का जवाब देंगे और इस विषय पर आप हमसे कोई भी जानकारी प्राप्त कर सकते हैं। हमसे संपर्क करने के लिए आप हमें फोन कर सकते हैं सीधे इन नंबरों पर 23717106 और दूसरा नंबर है 23421050। दिल्ली से बाहर के श्रोता इन नंबरों से पहले एसटीडी कोड 011 भी डायल करें। आपके सवालों का जवाब देने के लिए हमारे साथ मौजूद हैं म्यूचुअल फंड्स एक्सपर्ट धीरेन्द्र कुमार। धीरेन्द्र कुमार, कार्यक्रम में आपका स्वागत है।
धन्यवाद आपका।
और अब हेडलाइंस लेके मौजूद हैं वी रवि कुमार।
Over 3.5 crore poor families got houses under PM Awas Yojana in the last 8 years, says Prime Minister Narendra Modi. And Brent crude oil prices rise 2% this week as demand rise hopes outweigh recession worries.
प्रधानमंत्री ने कहा है कि पिछले 8 वर्षों में प्रधानमंत्री आवास योजना के अंतर्गत 3.5 करोड़ से अधिक गरीब परिवारों को आवास उपलब्ध कराए गए और दुनिया में मंदी को दरकिनार करते हुए मांग बढ़ने से पैदा हुई उम्मीद के बीच ब्रेंट क्रूड कच्चे तेल के मूल्यों में 2% की वृद्धि दर्ज की गई। और आज की पहली खबर, प्रधानमंत्री नरेंद्र मोदी ने मध्य प्रदेश में प्रधानमंत्री आवास योजना ग्रामीण के अंतर्गत 4.5 लाख से अधिक लाभार्थियों के गृह प्रवेश में भाग लिया। श्री मोदी ने पीएम आवास योजना के अंतर्गत निर्मित इन आवासों का वीडियो कॉन्फ्रेंस के माध्यम से उद्घाटन किया। प्रधानमंत्री ने कहा कि पिछले 8 वर्ष में इस योजना के अंतर्गत 3.5 करोड़ से अधिक निर्धन परिवारों को नए मकान मिले हैं। उन्होंने कहा कि सरकार निर्धन और वंचित वर्गों के कल्याण और उन्हें हर सुविधा उपलब्ध कराने के लिए प्रतिबद्ध है। किसानों को अधिकतम सुविधाएं देने के सरकार के लक्ष्य को स्पष्ट करते हुए श्री मोदी ने कहा कि सभी खाद्य वितरण दुकानों को प्रधानमंत्री किसान समृद्धि केंद्रों में बदला जा रहा है। किसानों के उपयोग की प्रत्येक सामग्री अब इन केंद्रों से उपलब्ध होगी। प्रधानमंत्री ने कहा कि यूरिया उर्वरकों के चयन में किसानों को होने वाली समस्याओं के समाधान के लिए जल्दी ही सभी उर्वरक भारत ब्रांड नाम से उपलब्ध होंगे।
And our first caller has joined us in this edition. Obhik from Kolkata is online with us. Obhik, welcome to Market Mantra. Please ask your question.
मेरा क्वेश्चन मैं थोड़ा धीरे बोल रहा हूँ तो आपको मगर समझ में आए। मेरा पहला क्वेश्चन, सब लोग बोल रहे हैं कि इकोनॉमिक इंडिकेटर्स बहुत अच्छे हैं, ऐसे पहले कभी देखा नहीं गया था। तो अगर मैं सर को पूछना चाह रहा हूँ, कोई 4 से 5 साल के लिए इन्वेस्ट करेगा म्यूचुअल फंड में, तो ये सच में ही क्या इकोनॉमिक इंडिकेटर्स जो होते इकोनॉमी के वो नेवर बिफोर ऐसा दिखा रहे? एक नंबर क्वेश्चन। दूसरा क्वेश्चन, सर स्मॉल कैप और मिड कैप ये दोनों में 4 से 5 साल में अगर कोई सोच के चले SIP करते रहे, रिटर्न में कितना डिफरेंस आ सकता है? थैंक यू। थोड़ा डिटेल में दोनों क्वेश्चन अगर बताएंगे बहुत अच्छा रहेगा। हैप्पी दिवाली टू यू।
थैंक यू। इकोनॉमी का जो इंडिकेटर है वो सचमुच में मैं ऐसा नहीं कहूंगा कि ये पहले कभी ऐसी मजबूत स्थिति नहीं दिखी है। इकोनॉमी के स्ट्रेंथ के बारे में जो अभी कहा जा रहा है वो प्राइमरी बात यह है कि दुनिया भर में अभी जो स्थिति है और जिस तरह की स्थिति बनी हुई है उसमें हम सबसे बेहतर दिख रहे हैं। हर जगह महंगाई बढ़ रही है, हमारे यहाँ उतनी नहीं बढ़ रही है, हमारे यहाँ ब्याज दरों से और जो दुनिया भर में जो स्थिति है वो इतनी बुरी इसलिए भी है क्योंकि वो मुश्किल स्थिति के आदी नहीं है, हम बहुत सालों से इसके आदी हैं। तो इस वजह से ये एक बड़ा अंतर दिखता है। लेकिन ये कहना उचित नहीं होगा कि आज तक कभी हमारी इकोनॉमी की स्थिति ऐसी नहीं रही है या आज की स्थिति आज की स्थिति बेहतरीन है। दूसरा बात की स्मॉल कैप और क्या 4-5 साल के लिए इन्वेस्ट करना अच्छा रहेगा? मुझे लगता है 5 साल की अवधि के लिए अगर आप कभी भी अपना पैसा एक्यूमुलेट कर रहे हैं, धीरे धीरे लगा रहे हैं, तो मुझे नहीं लगता है कि आपको चिंता करनी चाहिए। और खासकर अभी जो बाजार की स्थिति है और अभी जो स्टॉक मार्केट, उसकी तुलना में हो सकता है कि अभी जिस तरह से ब्याज दरें बढ़ी हैं, फिक्स्ड इनकम में भी थोड़ा आपका एलोकेशन होना चाहिए। लेकिन 5 साल के नजरिए से अगर आप इन्वेस्ट करते हैं तो मुझे लगता नहीं है कि किसी तरह की निराशा होगी, और खासकर अगर आप अभी एक्यूमुलेशन फेज में ही हैं। और मिड और स्मॉल कैप में किस तरह का अंतर होता है? पिछले 10 साल में स्मॉल कैप का एवरेज रिटर्न करीब 18% रहा है, मिड कैप का 17% रहा है और फ्लेक्सी कैप फंड्स का करीब 14% रहा है। तो और ये जो मैं 18% या पिछले 3 साल में 30% का जो वृद्धि दिख रही है, ये केवल एक तरफा नंबर है। जब बाजार में गिरावट का दौर होता है तो यहाँ पे गिरावट भी भारी देखी जाती है। लेकिन अगर आप 5-10 साल की अवधि से देखते हैं तो हमेशा ही इतनी लंबी अवधि में स्मॉल कैप, मिड कैप, बाकी सब की तुलना, लार्ज कैप की तुलना में बेहतर करते हैं।
और मुंबई से हमारे श्रोता विजय लाइन पे हैं। विजय नमस्कार, बताइए क्या पूछना चाहते हैं?
नमस्कार, मैं सीनियर सिटीजन हूँ, मेरा उम्र 67 ईयर्स ओल्ड है। तो मैं चाहता हूँ कि कौन से हमको जो है फिक्स डिपॉजिट करना चाहिए अभी रिटायर एज में, या मतलब किसी बैलेंस फंड में, या किसमें मतलब इन्वेस्ट करना चाहिए? हमारे पास जो मनी ऐसे डे टू डे एक्सपेंसेस के लिए, कोई मंथली एक्सपेंसेस के लिए कोई प्रॉब्लम नहीं है, तो लेकिन उसके हिसाब से मैं जानना चाहता था क्या करना चाहिए।
जी हाँ, नहीं, आपकी स्थिति काफी साफ है कि आपको रोजमर्रा के खर्च के लिए आपको निवेश नहीं करना है। ये जो भी आपका पैसा है ये लंबे समय तक लगा रह सकता है, और आप चाहेंगे कि आप चूंकि सीनियर सिटीजन है, रिटायर कर चुके हैं, आमदनी अगर बंद हो गई है, तो आप चाहेंगे कि ज्यादा कंजर्वेटिव तरीके से ये पैसा आपका लगा रहे। उस नजरिए से किसी बैलेंस्ड एडवांटेज फंड में या बैलेंस फंड में, अग्रेसिव हाइब्रिड फंड में, चूंकि आपको इस पैसे से आमदनी की जरूरत नहीं है, क्या आप कोई भारी गिरावट के दौर में आप नहीं चाहेंगे कि आपके निवेश के भाव में बहुत भारी गिरावट हो, उस नजरिए से आपको ये निवेश करना चाहिए। ये निवेश करने के पीछे, ये सलाह देने के पीछे मैं आपको कारण बताता हूँ। एक तो कि फिक्स्ड इनकम में आपको जिस तरह का रिटर्न मिलेगा वो उसकी तुलना में महंगाई दर ज्यादा है। दूसरा, इस पैसे से चूंकि आपको जरूरत नहीं पड़ेगी, इस पैसे से आपको आमदनी की जरूरत नहीं पड़ेगी या इस पैसे की जरूरत नहीं पड़ेगी, तो इक्विटी में पैसा लगाना लोगों के लिए अनिवार्य है और रिटायरमेंट में और जरूरी हो जाता है, ताकि आपके पैसे का एक भाग महंगाई से ज्यादा रिटर्न जनरेट कर सके। नहीं तो आपको लगेगा कि आपका पैसा बढ़ रहा है, लेकिन आपका पैसा कम हो रहा होगा। और आप चाहेंगे कि आपका पैसा ठीक ठाक तरीके से बढ़े, खासकर जब आप लिक्विडिटी पे आप कॉम्प्रोमाइज कर सकते हैं, आपको इस पैसे की जरूरत नहीं है, और वहां पे स्टेबिलिटी से रिटर्न देने का बेस्ट पोटेंशियल यहीं पे है।
Right, let's remind our listeners that we have a new number on which they can call us, and that is 23421050. And if you're calling from outside Delhi, please prefix that with 011, or if you're calling from a mobile phone as well, prefix that with 011. And of course, the other number that is normally used in Market Mantra Interactive Editions is 23717106. So these are the two numbers on which you can call us and ask your questions directly to Dhirendra on any mutual fund issues. Numbers once again, 23717106. And the new number is 23421050. Dhirendra, you mentioned while answering Obik's question, Obik had called from Kolkata, fixed income में allocation होना चाहिए. So debt funds have typically not performed very well if you see the last 1 year, 1.5 years. Is this a time with the increase in interest rates to move towards debt funds? And if so, what would be the tenure? Should it be short term, medium term, long term? What should be the tenure?
No, every investor, investors haven't earned or, debt funds haven't given good return. But giving good return from or deriving best return from debt funds is not the only goal. They have not given good return, but they have not given any negative return. The return from a short-term fund could be typically in the region of 2 to 5%, and that is good news because debt funds have a role in the long-term portfolio of any investor for two reasons. One is the money that they need in the near future. 1 year, 2 year, 3 year, you need that money. That money must be in fixed income. And that is the money with which you can't take a downside risk, or you can't invest in something which can potentially be substantially down in value when you need it. And in the near term, the stock market is not predictable, or it's sometimes very surprising. So to provide stability to an overall portfolio, that is the other need of it, other needs or fulfilled by fixed income fund. So with that in mind, if you have 100 rupees invested, of which 70 is into equity, which is extremely volatile. Last 1 month they are down to 3%. But there was situation, when equity values were down 10-15% from the recent peak. With that in mind, I think having that fixed income gives you an opportunity to have money which can be invested in equity at the very opportune time. Also, it provides you substantial stability to your overall portfolio. So these are two needs, and they still justify. And from here on, the short-term and the only debt funds which fulfill any individual investor's need investing for the long run are the short-term bond funds, and there are just too many of them. Ignore all and focus on that.
Right.
और मुंबई से हमारे श्रोता पंकज लाइन पे हैं. पंकज नमस्कार, बताइए क्या पूछना चाहते हैं.
Hi, good evening and happy Diwali to all the team members of Market Mantra.
Happy Diwali.
Thank you.
One is, are there some mutual funds which are technically better than other mutual funds? For example, say in a large cap, the fund manager has a limited scope because large cap companies are limited compared to say mid cap or small cap. And my second question is, if suppose I have 100 rupees and I have to choose between investing directly in shares and investing in mutual funds, so how do I decide that, and is that dependent on my age, my income and other things? Thanks.
Your first question, my suggestion is that the flexi cap or the multi-cap funds or the value-oriented fund, these are the categories from which an investor should choose, because the large cap, mid cap and small cap, they are actually limiting funds. These funds, by their very design, or any of the sector funds or any of the thematic funds, by the very design, their stated objective is to carry a narrow portfolio. Mid cap funds should not invest in non-mid cap stocks or small cap in small caps. So in that sense, you are able to derive full value of a mutual fund when you invest in a multi-cap, flexi-cap or the value-oriented fund. And they turn out to be the best long-term vehicle because the other funds, the other kinds, the narrower ones, they do exceptionally well sometimes and they do very poorly sometimes. And it averages out. And most investors should, the only thing which an investor has in their hand to reduce their risk and optimize their return is to diversify well, and they prove to be better vehicles of diversification. Your second question that, how much to invest in equity directly and when should you do it? I think equity investment is, everybody should start with a balanced fund for 1 or 2 years, then move to a combination of small cap, mid cap to optimize your return. And after 3 years, once you are used to ups and downs, and read quite, if you don't have the time, if you don't have the inclination, if you are not going to be fundamentally guided, don't even consider of going into market or investing directly into stocks. Because what happens is the difference between investment and when you do your SIP, you know that you are doing it for 5 years, you do it with 10 years in mind, or you are doing it for the period and you are unlikely to withdraw it till you need the money. But when it comes to stock market, investing directly, it is so accessible. Putting money is easy, taking money out is easy, and market is crazy on a day-to-day basis, and it is impossible to predict in the short run. So that actually creates an opportunity where you, despite not having an intent to do that, building a temperament to become a good investor takes time. So I would say that start with a mutual fund, a balanced fund, become an all equity fund investor. And after 2-3 years after you're learning, and only if you have the time, inclination, and you think you have building a temperament, if you are going to be very uncomfortable with a 30% decline in value of your investment in 2 months' time or 1 month's time, you may still not be ready to be investing in equity. And the other risk which you should be guarding yourself against is it actually becomes a speculative den. It becomes so easy to be making a long-term investment, but by the evening the price has gone up and you tend to get out, and then you tend to get addicted. So the speculative avenue made available by the equity market also drives many investors to become speculative investors without having a plan or a desire to be so.
Our next caller is from Bilai. Ravi Narayan is online with us. Ravi, welcome to Market Mantra. Please ask your question.
Good evening, Market Mantra. Very, very happy Deepavali to all, and Dhirenji also.
Thank you. Same to you.
Thank you. Thank you. There are two questions actually. One is to differentiate between hybrid equity and focused equity. What exactly is the difference between them? And the second is how does an equity fund perform better in the long run, and how does it beat inflation? Thank you.
Okay. Hybrid equity, I don't know what you're referring to. Are you referring to flexi cap or multi-cap, a fund, diversified equity fund? That is one part. And the focused funds tend to carry a more concentrated portfolio. They say that they will carry 10 stocks or 15 stocks or 20 stocks, not diversified beyond a point. And that is their claim to differentiation. So they tend to be far more volatile, and they can be risky bet, and they can be potentially hugely rewarding, because many a time, typically, a fund has 40, 50 stocks, and sometimes it has a long tail. There are many positions which are very small, or the fund manager is building it up or trying to figure out, or there are situations where, the fund manager cannot build a large position despite being a large fund. So there are all kinds of constraints in which a fund operates. So I would say that, a focused fund could prove to be, can well be a very rewarding and a very taxing or a more volatile way of investing in equity. And why do equities actually tend to deliver more return or beat inflation? Simply because the goods and services that we buy from companies, they tend to get, or a good company, they are able to adjust, or they are able to adapt themselves to make more money or earn more profit or update or revise the prices. I can, just cite you one example just to absorb this point. In 1985, Maruti Udyog launched Maruti 800, and the initial price was 45,000 rupees. I don't know what the price of a Maruti 800 is today, but during this course of 85 to 2022, Maruti Suzuki, it has become from a government company to a Japanese company, the joint venture partner acquired, and it has become a more diverse company, and it has become the leader in the automobile passenger car business in India. And during this period, that 800, what was launched for 45,000 rupees, or it was the flagship product of the company, the price has been updated with the rising price of steel, engines, whatever, all the kind of input that has gone into it. And the company still makes profit despite revising the price and being competitive enough to have a large market for the same product despite revising the prices in line with the inflation. So, equity is if you have a diverse set of companies and they are profitable and they are able to grow their earnings, then they tend to beat inflation because their earnings are inflation adjusted.
और दिल्ली से हमारे श्रोता आर.एस. दहिया जी लाइन पे हैं. दहिया जी नमस्कार, बताइए क्या पूछना चाहते हैं.
सर नमस्कार, विश यू हैप्पी दिवाली.
थैंक यू, सेम टू यू.
अच्छा धीरेन्द्र जी से क्वेश्चन है एंड गिव मी लिटिल टाइम टू नोट डाउन द डिटेल्स टोल्ड बाय हिम to invest 13 lakh rupees for a period of 7 years with the purpose of mainly growth. No regular income is required, and we should I invest in separate schemes like small cap, mid cap, and large cap separate funds, or a multi cap fund. I want names only 3 mutual fund schemes in which I can invest this money.
Yes, I would say that, to keep it simple, to keep it low maintenance, and, invest. But you'll have to follow the basic rule that you should be investing in these funds, for 7 years. But you are not going to invest tomorrow. You must spread this investment over the next 6 to 12 months. And the way to do, if I have to list 2-3 funds, say Kotak Equity Opportunity or SBI Focused Equity or Mirae Asset Focused Equity. These are a set of, or Invesco India Contra Fund. Pick any 2 of them. And that's about it. Spread the money over the next 6 to 12 months. And this will be a low maintenance investment for the next 7 years.
Right. There was a question that had come earlier and that made me think, because a lot of senior citizens look for FDs as an option. And if you see from May, RBI has increased the rates almost 2%, whereas the FD rates of the 1 year period have not quite caught on, because I see most good banks are offering around 5.7, 5.8% for a 1 year FD, whereas the RBI retail direct site for a 364-day treasury bill is offering 7.02%. So what would you advise a very cautious investor who is investing for a 1 year period? What should he do? Should he wait? Should he invest? Where should he invest? These are typically FD investors.
When I'm referring to RBI Direct making available the treasury bills, there can't be anything safer than that in India. It is safer than any bank deposit, and it is yielding more, and it has the natural expiry. But many investors are not sophisticated enough to access it. They will not be comfortable to actually make the online investment, though, and there's absolutely no doubt about this, the safety of it. So, and many, you listen to all the people who are asking these questions, they'll be very unsure of doing something where there isn't a person on the other side of the table. So, doing it completely digitally, online, and however which happens to be the safest avenue, still people will be apprehensive. But it is proving to be the best performing or the most rewarding and the safest 1 year investment vehicle available to investors today.
Next on line is a very famous name in the mutual fund industry. Prashant Jain from Kolkata is online with us. Prashant, welcome to Market Mantra.
Sir, good evening, Market Mantra team, sir.
Good evening. Please ask your question.
Sir, I have the query. One should invest in one's portfolio. There should be investment in gold, and if gold में invest करो तो ETF through करो तो कैसे होगा? And what percentage in one portfolio should be in gold? Thank you, sir.
No, it is not compulsory to have gold in your portfolio, and you can do without gold.
I know, Dhirendra, you hate gold, but you can be slightly kind on Dhanteras at least.
Yes, that is a need. Look at it. The 10-year return on gold is 3.48%. Last 1 year return on gold is 3.95%. So 3.48%, 10 years, I think, it is self-evident. I will close the case here. But Dhanteras, go and buy. And go and buy worth 500 rupees, 5,000 rupees, or 50,000 rupees, depending on your budget and and look at it as a consumption. Look at it as a store of value. And look at it as a store of value for the worst of times. If you are getting stuck and we are actually witnessing far greater uncertainty and unsure of what is going on. But don't think of it as an investment.
Right, and probably I was looking at the AMFI data that the gold ETF flows have actually shrunk despite the almost 9% return in the last 1 year. They've shrunk to half. So your advice has been taken by the investors very seriously, Dhirendra. Investors in gold are not taking my advice. If they take my advice, I've been stuck with this advice for so long that by now, if I had,
any impact, or if I had any meaningful influence, they will not be having this. They will not have the amount of money that is still there. The problem, the issue is that, and that is despite that now we have sovereign gold bonds available, which is another vehicle, another way of investing in or riding gold appreciation with a reasonable safety, plus more. All these funds, all these avenues, all the ETF, the fund of funds, they will cost money. They will get you a little less return than gold. That is something which gives you 2.5% more than the gold. So that is, and for our 8-year holding period, it also becomes tax-free. And issued by Government of India, you can't think of a greater, safer avenue or the unlikelihood of that being honored. Despite that, I think, investors chase performance, and because the recent past performance of gold has been disappointing, that is why people are pulling out money.
Right, let's quickly look at the oil market in the week gone by. Brent crude oil prices rose, but US crude fell this week as hopes of stronger Chinese demand and a weakening US dollar outweighed concern about a global economic downturn and the impact of interest rate rises on fuel use. Brent prices rose 2% during the week to end at $93.5 a barrel, but US crude fell 0.7% to settle at $85.05 a barrel. To fight inflation, the US Federal Reserve is trying to slow the economy and will keep raising its short-term rate target, Federal Reserve Bank of Philadelphia President Patrick Harker said. Crude oil prices are gaining support from a looming European Union ban on Russian oil, as well as the recent 2 million barrels per day output cut agreed to by the Organization of the Petroleum Exporting Countries and allies, including Russia, which is known as OPEC+. The dollar eased against a basket of currencies after reports said that some Fed officials have signaled greater unease with big interest rate rises to fight inflation, even as they line up another big rate hike for November. China, the world's largest crude importer, has stuck to strict COVID-19 curbs this year, weighing heavily on business and economic activity and reducing demand for fuel. Another news item that I saw during the week, Dhirendra, was about this Bharat Bond Exchange Traded Funds, which has crossed 50,000 crore assets under management in 3 years from launch. It was launched in, I think, December 2019. So how would you see this particular ETF? Is it a good investment? Is it a bad investment? How would you rate this particular investment?
Yeah, it's a great investment, and it has turned out to be and it was launched at a time when there was far greater uncertainty, and the returns were, the yields were not very high, and that is one bond fund which has been able to cut on the expenses. This is one problem with most of the bond funds. The expense that we incur, the expense ratio of most of the bond funds is very high in relation to the return that they generate. Today, because the bond returns are so low, and if a fund is actually charging 1% or so, which they are very comfortable with, or that they think is the norm, but that as a percentage. So Bharat Bond Fund is actually very impressive on 2-3 counts. One is that it's a high quality fund. Public sector companies and better rated public sector companies, they are there. The likelihood, and it is also, I would say that there is some kind of tacit understanding. The moment we invest in a public sector company, even though it may not carry a sovereign guarantee, we tend to think that it is far more safer. The company is unlikely to disappear or unlikely to say that I don't have the money now. The way, people faced with DHFL and, Yes Bank kind of situation, we are unlikely to face that. So that's one. Relatively superior quality credit, decent return, and launched at a very opportune time, and then over and above very low expenses. So that makes it a beauty.
जी धीरेन्द्र जी, इस कार्यक्रम में भाग लेने और श्रोताओं के प्रश्नों का उत्तर देने के लिए आपका धन्यवाद.
That's all that we have in this edition of Money Market. But before we close, a reminder of the headlines. Over 3.5 crore poor families got houses under PM Awas Yojana in last 8 years, says Prime Minister Narendra Modi. And Brent crude oil prices rise 2% this week as demand rise hopes outweigh recession worries. Happy savings, happy investing, happy profits, happy Dhanteras, and happy Deepavali from all of us. Namaskar.
Market